Hello again, Miles Eakers is a familiar face here on London Direct, and I've been back to the offices of Savvy Trading to speak to him once again. Before we look at the FX market, I just want a quick word about volatility generally. Central banks did a good job of killing volatility in 2012. Are you seeing more profit opportunities now?
Yeah, definitely. I think there's a lot of volatility. We're looking more at some of the other crosses like the yen, obviously, and obviously like the euro, Aussie, euro, CAD. The dollar crosses aren't moving as much as they used to. If you look at euro dollar, despite the movement, it's not as much as usual. Cable's obviously coming off, and Aussie's stuck in a very tight range. Only over the last few days or so, we've seen some moves in the FX markets in the dollar crosses like Aussie and cable. What about the euro story? It seems Mario Draghi and Francois Hollande have done a good job of talking it down. Yeah, they've some comments come out saying that obviously the euro is a little bit overvalued, and they all seem to have this catch-22 where if the euro is coming under pressure, it's because it's bad news in Europe. But as soon as Europe starts to get itself together, the euro does strengthen quite considerably, which is obviously detrimental for exports. You've seen euro go from 120.50 all the way up to now the 137.10 high, which is obviously a big percentage increase, which is going to have net damaging effects on exports. So it is interesting to see where we go from here. I think this 130, 135 range is going to be holding for the near term. But I still think it's worth buying dips down to there as long as nothing too bad comes out in Greece, Spain or Italy. Yeah, and 137 seems a long way off now. Do you think we're going to cement, or will there be a point where we cement above 135 looking towards 137 in the near future? Yeah, definitely. We had a target of 138 for a euro. That was the next level. We didn't quite get there, I think. Obviously, the data last Friday was dollar positive. Obviously, we saw very strong dollar yen and obviously the euro yen, but euro dollar did struggle. And we've seen some profit taking on some moves up here, and I think we are going to have to take out some short-term long traders and obviously attract some more buying interest a bit lower down. Yeah, and also let's look at the Australian dollar, because I know it's a currency which you like to trade. It's really been underperforming the market and continue to do so. Do you see much more downside there? Yeah, definitely. We've had some more bad data come out of Australia during the course of the week, and I think rather than trading the dollar cross, like a lot of people like to trade the dollar cross, I'm looking at euro Aussie. I've been long for a while now, and I think as long as Europe does show continued strength, I think there's definitely potential for further up gains in euro Aussie. And what about the dollar yen? It's still struggling to hit that 95 mark. Yeah, we were speaking about it when we were 95, and it's such a psychological level. It's obviously a technical resistance level and a round number. And I think obviously some comments from Bank of Japan about the yen obviously appreciating too quickly. I think they got what they wanted far too quickly, and obviously a sharp spike has obviously done well for the Japanese exporters. But now we're seeing a bit of profit taking. We've got a long holiday in Japan, and I don't think fundamentally anything's changed. So we are looking at potentially 92. If we break through there, then we may have to reassess. But there's this 123 level on euro yen and 123.50 as well, in particular where we're trading around now. It's potentially worth picking up some today, potentially for next week. Yeah, and just generally speaking, as we said, we've seen policymakers talking a lot about trying to talk down their currencies. Yeah. That's just something we have to continue to get used to, isn't it? Yeah, the old adage of currency wars is becoming more and more apparent, I think, and it's being used very much in like Google search engine, Twitter and stuff like that. And it's going to be done at the end of the day. You can get export-driven growth, but if everyone's fighting for the same end, we're not really going to see any movements. So I think the trick is to obviously trade in the direction of the governments, and then as soon as their currency gets too cheap and the other governments complain, start to take the other side of the trade.
Well, I'll be back to the offices of Savvy Trading to speak to Miles in a couple of weeks, but for now, goodbye.